Today we're diving into a topic that's got the entire market buzzing. Nvidia's shares are sinking, and it's happening right after they posted record-breaking sales of $30 billion. You'd think with numbers like that, the stock would be skyrocketing, right? But nope, it's doing the exact opposite. So what's going on here? In this video, we're going to break down why Nvidia, despite dominating the AI and semiconductor markets, is facing such a steep decline in its stock price. We're talking about the risks, the market overreactions, and the hidden factors that Wall Street might be seeing that we aren't. Trust me, this isn't just about a bad day in the market. There's something much bigger at play here. So stick around as we unravel what's really happening with Nvidia and why this could be a crucial moment for the tech giant and maybe even for your portfolio. Alright, let's start with the obvious. Nvidia just posted $30 billion in sales. That's a number that should make any company's stock soar. I mean, it's not just a good quarter, it's a record-breaking one. Nvidia's been riding the wave of the AI boom, and they're pretty much at the center of it all. Their GPUs are powering everything from data centers to AI research, and the demand has been off the charts. But here's where things get interesting. Despite this massive revenue, the stock tanked. Why? Well, first off, the earnings themselves were actually pretty solid. We're talking about a company that's still growing at an incredible pace. Their revenue beat expectations, their margins are solid, and they've even started shipping new products ahead of schedule. So on paper, everything looks fantastic. But the market doesn't just react to what's happening right now, it's always looking ahead. And that's where the concerns start creeping in. You see, Nvidia's success is tied heavily to the AI revolution, and while that's a massive opportunity, it's also a huge risk. The market is worried about what happens after this initial AI hype dies down. Once these massive AI data centers are built, where does Nvidia go from there? Jensen Huang, Nvidia's CEO, even touched on this during the earnings call. He mentioned the need for continued innovation, which is great, but it also made investors pause. If the growth rate slows, even a little, that's a big red flag for a stock that's been priced for perfection. And let's not forget, Nvidia's stock was already trading at sky-high valuations. Any hint of slowing growth, and you can expect the market to react, and react hard. So, while Nvidia is still crushing it in terms of sales and growth, the market is starting to question how sustainable this growth is. Is this just a peak before a plateau? Or worse, could it be a peak before a decline? Now, let's dig a little deeper into the concerns that might be weighing on Nvidia's stock. First off, we have to talk about AI consolidation risk. This is a big one. As AI continues to evolve, it's not just going to create winners, it's going to create a lot of losers too. Companies that fail to adapt or integrate AI effectively might find themselves out of business. And here's the kicker. If these businesses start dropping off, Nvidia could see a shrinking market for its chips. Think about it. AI is supposed to make businesses more efficient, right? That's great for the companies that get it right. But what about everyone else? If AI leads to fewer businesses and fewer jobs, that means fewer customers for Nvidia's products. It's not just about selling chips anymore. It's about the overall demand for those chips in a potentially shrinking market. There's also the issue of software consolidation. AI could enable companies to cut down on the number of software licenses they need because they're automating more processes. If fewer people are using software, that could mean less demand for the high-powered GPUs Nvidia produces. We've already seen some companies like Klarna cutting down on their software stack thanks to AI. If this trend continues, it could spell trouble for Nvidia's long-term growth. And then there's the matter of market saturation. Nvidia's been riding high on the back of the AI boom, but there's a question that investors are asking: how much higher can they really go? Once these trillion-dollar AI data centers are built, what's next? Sure, there's always room for improvement and new tech, but at some point, the market might start to plateau. And if Nvidia's growth slows, even a little, it could lead to a significant revaluation of the stock. So, while Nvidia's fundamentals are strong, the market is starting to weigh these potential risks more heavily. It's a classic case of what goes up must come down, and investors are trying to figure out if Nvidia is approaching its peak. So, Where does this leave Nvidia? On one hand, you've got a company that's absolutely dominating its field. They're making money hand over fist, and their technology is at the forefront of the AI revolution. But on the other hand, there's a lot of uncertainty about what comes next. Investors aren't just looking at today's numbers, they're trying to predict the future. And the future, as we all know, is never a sure thing. One of the biggest risks here is market sentiment. Nvidia's stock has been priced for perfection, which means any sign of trouble, any hint that the growth might slow, can send the stock tumbling. That's exactly what we're seeing now. The market is nervous, and nervous markets tend to overreact. But let's be clear, this isn't a death sentence for Nvidia. Far from it. In fact, this could be an opportunity for savvy investors. If you believe in the long-term potential of AI and Nvidia's role in it, this dip might be a chance to buy a great company at a discount. However, it's important to tread carefully. The risks we've discussed are real, and the market could stay volatile for a while. In conclusion, Nvidia is in a fascinating position. They're leading the charge in one of the most exciting technological shifts we've seen in decades. But with great power comes great responsibility and great risk. The market's reaction to their latest earnings shows just how quickly things can change. Whether this is a temporary setback or the beginning of a more significant shift remains to be seen. But one thing's for sure, Nvidia will be a company to watch closely in the coming months.